My guest today is Jeff Zananiri. Jeff, welcome.
Hello, James. Nice to be with you, sir.
You as well. So, Jeff, I see that we've got oil on a tear. Gold, after touching 1760 and then some, is now trending lower, and the FANG stocks are all having a good pop here. For all intents and purposes, you think the crisis was over?
So I don't know if you watched 60 Minutes in Canada, but Powell last night was on TV talking about we can digitally create as much currency as we want. He basically said we print money whenever we want, however much we want. We can do a lot more than we've done. And then he went on to say that he doesn't think we're going to be out of this crisis for at least 2 years. And so the market, I think, is interpreting it that we're going to be in this, that they're going to be comfortable running the market hot with a lot of inflation to combat the obvious shock that's occurred in the real economy. So then you're going to start to get all these distortions. You're already seeing it. You've seen it in a lot of the commodity prices today. You've seen it in energy. You see it in some of the grains. Soybeans were up this morning. Some of the metals that are some of the industrial metals like aluminum, et cetera, are bid today. And so that reflation trade is coming back. Makes me more bullish on gold down the line. I think there might be a little bit of a technical breather today, but it's, for me, the only pure money debasing reflation play that there is that's not economy dependent, so to speak. Energy, the grains, the metals that are not precious metals. They're dependent on economic activity. They're on construction, on growth. And I don't want to be in that. I want to be in the inflation trade, which is gold, but I don't want that kind of exposure. I think the market's a little bit ahead of itself with just like that sugar high this morning. You're actually seeing Amazon selling off today, which is interesting. Amazon's one of the stocks that is down today, believe it or not. Banks are rallying hard in the U.S. and we'll see. We'll see.
Right. Do you think Amazon's backing off because it got so much momentum going as a result of the increased business from stay-at-home people ordering 10 times more of everything than normal?
I think that's a big part of it, but I also think it's like, so that trend I trade pairs, I trade long shorts, and I've been trading Amazon against traditional retail. So long Amazon, short traditional retail, brick and mortar retail for 10 years. And it's been a kick-ass trade. And this put it into hyperspace. But for me, what's happened was there was such a fear that the world is going to not ever come back to what it is, right? To what it was. And so Amazon is this huge liquid winner. Everyone knows it's a winner. They're winning in the middle of the crisis. And so they became a de facto safe haven just because of the size, which was able to absorb all that digital currency creation that Powell's been doing.
Yeah.
But also because of the fact that Amazon's going to be there in 10 years.
Yeah. Well, I think
premium for that.
Yeah, you bet. I think that the gods of investing are listening to you because it's now reversed and is trending strongly higher at this moment. So
nice.
You're absolutely right. Okay, well, so then if we were to historically compare this reflationary period as you describe it, and compare that to the reflationary exercises by the Fed starting in 2009, this is order of magnitude greater.
Yeah.
And so is our expectation then that the increase in the S&P FANG stocks and that ilk are going to be the recipients of an order of magnitude more buying?
I mean, that's the $1 trillion question. I would say no. Because at the end of the day, these stocks aren't owned by the Fed yet. The fear is that the Fed's going to be the major holder at some point, right? But right now, people still own these stocks in their passive funds. The hard thing that people are having a hard time with right now realizing is that traditionally when we have a recession, a depression, a market breakdown, it doesn't come in a month. You'll have a capitulation in a short period of time, but it's a long time brewing. So what's going to happen is people are going to sell off assets to fill the hole in their income and their personal life. And that's something that we haven't seen yet because it's so short-lived. If you have money, if you have savings and you own stocks, it's been 2 months, maybe you don't sell your stocks to pay for your kids' college, but 24 months from now, you might have to if you're making 70% of what you used to as a lawyer. So I think that there's going to be waves of selling still, because no matter how much we want to admit it or not, there's still a huge, huge tie to asset prices and personal income.
Mm-hmm. We've seen quite an escalation in the rhetoric between China and the United States in terms of not just a trade war, but now there's this talk about incentivizing and penalizing U.S. companies for having supply chains in China in an effort to incentivize them to repatriate them to the United States, which certainly is consistent with the current administration's America First approach.
Yeah.
And fair enough, that's democratically elected president. We can't argue with that. But is that likely to become something that's more of a downward influence on the near-term market enthusiasm if it continues to escalate?
It's something I'm certainly watching out for. I mean, like I think we talked last time, there were certain specific sectors like semiconductor, chip equipment stocks, technology on the whole, big US corporate technologies, of course, a slave in a way to the supply chain that they're dependent on out of China. I don't think that it's as difficult to produce those supply chains as people think it's going to be. I think these companies are extremely crafty at creating that reality. I think it's been a little bit of a human capital arbitrage, but with AI and with machine learning and with robotics like completely taking over the entire manufacturing process, that whole human capital arbitrage game for me had a finite amount of life left anyways. So I think it was going to die anyways, because the days of needing a Foxconn to create an iPhone in a weekend just because there's no human rights standards there for the employees, and having people bunking in rooms like 30 people in 700 square feet to crank those bad boys out in 48 hours. Those are going to be days that we look back on in history and say, how the hell did that happen? Why the hell did that happen? So in a way it's bad. It'll be a drag, but in a way it'll build a more robust system, I think, down the line.
Mm-hmm. Mm-hmm. So do you think that there's any sort of threat or risk that the coronavirus and its economic damage instigates a geopolitical sort of reordering? I mean,
there absolutely is. I think what's going to happen, I'm super bearish on China long term. And I think that China's problems have been there for a while, right? Like I said, that human capital arbitrage play is starting to leave, right? And so then what do you have? You have a group of people that went from an agricultural economy to a manufacturing economy in the 2000s that got a little bit of a taste for the good life. They got a TV. They got. I'm not trying to be disparaging, but their quality of life, broadly speaking, in China improved greatly, and so you have to placate these people, right? So I think their internal problems are the worst. Their worst nightmare, their biggest headache. A lot of people say, "Oh, the Chinese are just going to come out. They have all the leverage," and I don't think that's the case, because they're the ones the most dependent on the old system. I think the U.S. system of kind of like self-reliance economically, having everything in-house, or at least with like unilateral trade arrangements like with Canada and with Mexico, I think that's going to be the model that works. And you're going to have to be on the same page on a lot of things, accounting standards, worker rights. Just my opinion. I'm not an economist, but it just feels like that's the way the ball's headed.
Right. Interesting. So that's a very interesting point. I concur. I've always felt that China, while it looks like this giant roaring tiger moving forth from the dark ages into the modernity, they have this persistent issue where if they're to bring up that entire population to a minimum standard of living, then the standard of living for those at the top of that food chain is going to have to come down quite a bit.
That's right.
Because 1.8 billion people need to grow a lot of food, and so that's a big system to hold up, especially when you're doing it by force.
Yes.
And so I've always felt that, well, as long as China can induce, economic improvement for the majority of its population, that they will be able to maintain their authoritarian regime. But as soon as that starts to fall apart, if they lose the manufacturing, baseline to their economy that they've come to rely upon as a result of America repatriating it to their shores,
Yeah.
that is really a strategic undermining of the social stability in China, which could then, cause real serious geopolitical changes internally to China.
That's what I'm really nervous about. If you really ask me what I'm nervous about as a black swan, it would be a hot war breaking out with China in Asia. Like, hot wars have started for much less. And so if they start to feel this huge internal pressure of discontent, the easiest way to get everybody back in line is to start a war with somebody else. And then you start selling that patriotism. You get people to work to build the war machine, et cetera. So it makes me a little nervous. It's something I think the Trump administration is considering. I know he's got a few hawks on his administration, like Pete Navarro, guys like that. Pompeo's pretty hawkish, and they're constantly trying to balance out how much pressure do we put on them, and then they pull back, if you notice, which is smart to do. Because the thing is that we want China to be a great country. They have great people, the wonderful culture. It's one of the richest traditions in this world, right? Super passionate, hardworking, great culture, great organization. We want them to be a thriving nation. But I think they're going to have to change a little bit how they've been operating. And I think that whole authoritarian thing is going to go. I just don't know. And they never go quietly into the night, but I think that model's busted.
Yeah.
It's a busted model.
So we could look back and conclude that coronavirus was not the cause, but was certainly the catalyst for the end of authoritarian regime in China. And hopefully, fundamentally, that is the difference between the Eastern mentality and the Western mentality. Is the Western mentality is very, not so much democratic as it is purely capitalistic, in that
right.
We are born, bred, and educated to look out for number one, take
right.
care of you and yours, and that is our strength. Whereas in China, they're constantly selling this idea as hey, we're doing this for the collective. We're taking your daughter and sticking her in that prison for the collective. And it's like, well, okay, I think that's something that especially Chinese, who have now become, the society has definitely backed off on allowing people to enrich themselves, which used to be very much frowned on. That would just be confiscated by the government. Now you're allowed to be rich and Chinese. And so that genie's out of the bottle. So
they come, like, I've had 2 trading clerks from China in the last 15 years. Both were like ultra quant math geniuses, great guys, went to Ivy League schools in this country, got like perfect scores to get in. Like this one dude was from a rural province, and he was like, I had to be the best person in this province to even submit an application to get into UPenn. And I was like, really? It's like, yeah, I couldn't be number 2. I had to be number 1. And so it has fostered like an ultra competitive thing. But I think that the point that I'm trying to make is that exposure to the West is their worst enemy, right? Information, knowledge that there's this opportunity out there, that to be the best should not get you like an extra $100 a month in groceries. It should give you all the spoils the world has to offer. Right. And so that's the hard one to put back into the bottle, in my opinion.
Okay, so then in the market side, what's the play? What's the opportunity if we're going to take that long view of China?
I think you have to know how to trade from the short side. I mean, I'm a trader, and I think you have to know how to buy puts, and I think you have to know how to short stock. And I like to put on pairs where I'm long companies that have an anti-fragility to them. U.S. companies, Canadian companies, better European companies. Europe's in a pickle too for a different reason. And then lay a short pair, perhaps in the same sector, with a Chinese company, because I feel I just have this nagging feeling that within the next 6 months there's going to be a huge escalation in the trade war between the United States and China, and there's going to be some sort of black swan situation. It's not going to be so much of a black swan if you listen to this conversation, where you're going to wake up one day and President Trump will be like, "Okay, Alibaba, you want to be listed in the New York Stock Exchange? You have to implement these accounting standards now. Do you really make that much money? And you're going to have to get audited by McKinsey."
Right.
And that's big. People don't know that. Like, they buy stocks, these Chinese companies, JDSU, Alibaba. They don't have the same accounting standards. They're not using GAAP, pro forma. They're just, they do what they do. They don't have to adhere to the same standards. They can list their company and raise capital through Western capital markets, but they don't have to do everything. They don't have to play the complete game. So there's already been murmurs that they might block U.S. pensions from investing in Chinese companies. Then what? If that happens, and then you start to see CalPERS, and you start to see Canada. I knew a guy that was at the Canadian pension that was one of the biggest players in the world. When he put a position on in a stock, he moved mountains.
Right.
Get those people to stop moving those mountains, it could be really bad. So I want to put myself in a situation not to fight those trends.
Sure, you bet. All right, Jeff, that's great insight. As per usual, we'll look for those evidence of your predictions emerging. I'm sure they are simmering under the surface. Thanks. We'll leave it now, and I'll see you next week.
Thanks, James. I enjoyed it as always. Take it easy.
Bye for now.
Bye-bye.